I think what we're really seeing is that's, if we just look at that actual willingness to pay for what's essentially a very high cost molecule, and the willingness to pay over and above the incumbent fuel cost, plus even the cost of carbon cost where that's available, that willingness has just evaporated over the last year in particular. And it's probably then just quite important to think about some of the factors that spurred that, what many would call the green premium. There's a number of different factors that fed into that, whether that was around, maybe stronger alignment on things like climate change policies, whether it was shareholder pressure to lower emissions and pivot more towards the energy transition, or whether it was technology progress, affordability. And actually what we've just seen over the last year, of course, is that a lot of those things have simply started to unwind. And so, I think your question is correct, that we probably are at that peak of where that willingness to pay has gone, and we have hit something of a ceiling. We do expect that to come back. It will eventually come back. What's really difficult is to really understand when, in particular, it's going to come back. And there are still policy supports out there that will force a willingness to pay, if you like. But those policies are more penalty related. So two good examples in Europe with the aviation and marine fuels, where there will be penalty costs if you don't meet targets and don't meet the rules. And that will essentially provide a willingness to pay in some cases.
With funding available but projects stalling, is weak demand-side policy now the primary constraint on hydrogen FIDs rather than capital or technology?
I would say yes, partly, but actually I think it's it's really the challenges that you face across the whole value chain, from production to midstream to the end consumer. And one of the things that we're seeing very regularly is this issue around the lack of infrastructure that increases the risks for the off-takers, but also increases the risk for the producers. And so, even in some of the markets where we've got very generous subsidy supports in place, the producers actually they still have quite a lot of risk to carry, because if that off-taker fails, they don't necessarily then have the infrastructure to access another off-taker. And likewise, an off-taker will in most cases be linked to one producer. If that producer fails, they don't then have access to another. So that's an ongoing challenge that the industry faces. Like I say, those subsidies can help, but it's a heavy burden for what are, in many cases, some sort of cash-strapped governments. One of the things we always look at and talk about is the implementation of a carbon cost can help, and it helps competitiveness. But even in a market like Europe, where you have a very well established carbon market, there's a cost on carbon. It is traded, so there is still that level of uncertainty around what level of cost a carbon emission is going to be. And so one of the things that we're often talking to policymakers, to industry about, is that would something like a carbon price floor maybe help and get over some of those hurdles in terms of progressing projects towards an FID.
So should the recent pullback by major energy and industrial players, the likes of BP, should it be seen as a temporary capital discipline or as a deeper reassessment of hydrogen's commercial viability?
It's really both, because some of those energy majors, they are absolutely refocusing their capital allocation. But in most cases, they've also just simply struggled to structure competitive low carbon hydrogen projects. And that's really about the nascency of the market. We're still very, very early stage. But what we should also remember is, if you look at some of those big major energy players, the industrial players, what can also be seen as a retrenchment is also, what we expected anyway, where there's also a narrowing of portfolios, and they're simply now focusing on the strongest opportunities, the strongest projects in their portfolio. So we do need to remember that many companies are simply going through that process that we really expected. I think maybe the other interesting point to note is that when we look at the portfolios of some of those large energy majors as well, is that we've really seen a bit of a retrenchment around some of the very large scale opportunities that they had. So, of course, those sorts of companies, they have great experience, great expertise to deliver very large engineering heavy projects. But in the case of low carbon hydrogen, they were encountering a lot of these first of a kind challenges. And that was also a problem that they were facing. So if you also look at those portfolios, what you'll also see is that, not just a narrowing of focus, but a narrowing of focus into smaller, more manageable projects, trying to get the learnings in before they then take on some of those larger, more challenging projects in the future.